Welcome back, everybody, to another question here on ExamPrep.ai. We've got some questions on public company reporting topics. Let's dive in. There's enough information here that makes me want to read the question first. And it says, what is BOM's weighted average of common stock outstanding at December 31st? Now, if I'm seeing this mixed in with other questions and I don't necessarily know that I'm in public company reporting topics, I know that in here, we're going to talk about EPS. Just familiarity with the material and the lectures and the lessons. We know that this has to do with EPS. And where does this fit in terms of EPS and all that? Think about it for a second. This is going to be our denominator in our basic EPS formula. Basic EPS is net income divided by common shares outstanding. To elaborate on that further, it's weighted average common stock outstanding for the whole year. And in the numerator, you're also going to take into account your preferred dividends as well if you have them. So a lot of times we don't, but sometimes we do. Let's dive in to determine these portions. BOM Company had 100,000 shares of common stock outstanding as of January 1st, and the following events occurred during the year. And I like to describe these ones as story questions. Like, it kind of tells a story, what's happening during the year. We've got different dates, different time periods that each of these things happen. Let's start with 1/1. That's the beginning of the year. We're talking about the full year starts us at January 1st and goes till December 31st. All right, so our first period is from January 1st to April 1st. So that first period in our year, we had 100,000 shares outstanding as per what it states in the beginning. 100,000 shares. And let's think about any changes there. Nope, I don't see any changes there. So that's 100,000 for 3 out of 12 months. I'm going to leave that there without coming up with the answer, and you'll see why in a second. All right, on 4/1, let's see. We had a 30,000 share issuance. Now we had 130,000 shares. And for how many months did we have that outstanding? Well, April and May, because at June something else happened. So for 2 months out of the year, we had 130,000 shares of stock. Now, if you're wondering to yourself, are they going to get into the days? Should you worry about, half of months or something like that? In my experience, the most they would ever do, and this would be a little crazy in and of itself, is they would say it's probably half a month. So on the 15th, so maybe you do 2.5 months or something like that. I wouldn't worry about it much past that, though. And if they do have something that gross and ugly, spend your time other places. You'll get points elsewhere. Next up, on 6/1, what happened there? Well, simply, it's just another share issuance. Nothing crazy happened. So if we do a little addition, we add 36,000 to our 130. That gives us 166,000. And for how many months was that outstanding? Well, the next change happened at 7/1. So 1 out of 12 months. All right, now, this is why I didn't have the calculation yet, because we have a 5% stock dividend. Now, how does that affect anything? Well, it actually affects us because what happens is we go and retroactively account for that. And by that, I mean we are going to multiply everything by 1.05. You multiply it by 1.05, that gives us a 5% increase. Stock dividends, this means, maybe we don't want to pay people in cash. We are diluting the shareholders. This is the opposite of a stock buyback. We are diluting shareholders by giving them more stock. 5%. So if I have, let's say, 100 shares, I'm now getting 5 new shares. That's what's going on here. So 5% increase. We're going to do that retroactively, affecting all of these amounts. Just going to put those in there. Awesome. Again, we'll still wait till the end to do all the calculation. Let's keep rolling here. Okay. Now, 7/1. Although we do need to calculate a little bit here to determine what's our balance at this point. So take a second, do the math yourself, make sure you're on par with this. All right, that is going to be 174, 300 shares, And for how many months is that? Well, July and August, and then we have a change in September. That is going to be for 2 months. What's our change in September? Let's take a look. Our change in September, we purchased as treasury stock 35,000 shares of common stock. We use the cost method to account for the treasury stock. All right, so simply put, this is going to be a reduction to our shares. We are buying back stock. We are putting it in our vaults. If we are Apple, we are taking those shares and buying them back. They're not outstanding anymore, so it's a reduction. They are still issued, but they are not outstanding. However, this question is asking about common stock outstanding. Other questions, maybe in equity section, will ask about how many shares were issued in existence. So 174,300 minus our 35,000 repurchased gives us our new balance of 139,300. And how many months did we have those shares for? September, October, November, December. That sounds like 4 months to me, although correct me if I'm wrong. No, that's 4 months. All right. Now, simply put, we just add up all these together after we multiply them, and they're going to equal 12 out of 12. That's going to be our total balance. I'll give you a second. Do your math here. Always practice the math. You'd be surprised how many points get lost by small, stupid mistakes, but that's not going to happen to you because you're going to practice. You're going to practice and get these questions right. First up, we have our total of 26,250. Next, we have 22,750. Over here, we have 14,525. Next up, on July 1st, we have 29,050. And last but not least, we have 46,433. Keep in mind also, generally speaking, any rounding, wait till the end to do it, like write out numbers that are as they are. The clean number is the number at the end. Now, if we add up all of these together, our balance on 12/31 is going to equal grand total of 139,008. Wouldn't you know it, we do have a 139,008 over here. Here's a nice format of our formula here. We start with our beginning balance. We add in shares sold during the period, so meaning issued. We subtract shares required during the period, so share buybacks, which in this case we purchased back 35. We add stock dividends and stock splits, which, wouldn't you know it, we did apply for it retroactively. And we subtract out reverse stock splits, which would mean it's another form of share buybacks, but you're halving the amount of shares, or not necessarily halving, but reducing it by a certain percent. Awesome, awesome there. You all enjoyed that one. Let's move on to another one. Well, this one, what amount is the company's basic earnings per share for the year ended December 31st, year 2? And what's the first thing that comes to your mind? Well, this is going to be net income minus preferred dividends divided by a weighted average number of common shares outstanding. Like we saw in the previous question, sometimes you'll have to determine this. Sometimes you'll determine net income. This could very much be a sim, right? Like I've seen many sims and heard of many sims being asked where it could ask for basic, it could ask for also diluted. It might have you calculate net income and your weighted average number of common stock outstanding, plug it all into this nice, concise little formula here, and pop out your final answer. Now, right here, let's dive in. Please memorize this. It is for you. It's not for me. It is quite important. Let's kind of do our math. I always like to start off with what's given. Like, is there anything given to us here? Well, thank the Lord. They give us $2 million of net income. That's one less step that we have to worry about. I like it. Very nice. So we are going to say $2 million divided by X. So we don't have any preferred stock. There's no mention of preferred stock. And that's going to equal EPS. The company reported net income available to common stockholders of $2 million. Preferred is their first class. They get the money before you do as the common stock holder. So in this case, though, you get all of it. The company had 1.5 million shares of common stock outstanding as of January 1st, year 2, and issued 500 additional shares of common stock on May 1st. Similar to the process we saw previously on determining our weighted average number of common stock outstanding, we're going to have to do a little calculation. But no worries, we are good at that, right? Well, let's see. We are going to have, I'll do it this way. This is kind of more simple way I would do it. The other way, when we have more numbers, you'll see what I mean. You'll see what I mean here. So we had 1.5 million shares outstanding for the total of 12 out of 12 months, right? That just, we did. We had 12, for 12 out of 12 months, we had 1.5 million shares. We also had for how many months? May to December, that's 8 months, we had 500,000 shares outstanding. So times 8 divided by 12. You could do it different ways, right? Like you could say for, January, February, March, April, you had 1.5 million for 4 months. You could, like, this is the way we did it previously, 4 divided by 12, and then you could say, okay, we had a total of 2 million shares for the remaining 8. You could do it either way. Honestly, get familiar with it however you want, just showing you both processes. I'm going to give you a second to do the math on your own. Definitely important to practice that. Okay, I'm going to go over it now. If you want more time, please pause the video. And final answer for our weighted average, so we're not done yet, weighted average shares outstanding, that is going to give us a balance of 1,833,3333, right? 3333. Okay, that's our denominator, right? Denominator there. Let's plug that into our x. 1,833,3333,3333. Sounds like I am a lawyer trying to have a catchy phone number. All right, do the math here. Check it out for yourselves. Practice, practice. You got this. Final answer is going to be $1.09 of earnings per share. That means as a shareholder, you're getting $1.09 of earnings for each share you hold. In terms of the greater picture, there's different metrics, right? Like a higher EPS is obviously good. That means you are earning more money for each share you hold of the company. However, a good buying opportunity might be when it's a lower EPS. That's why this is important. That's where it fits in. And earnings per share needs to be reported on the financials. That's why we do what we do. Awesome. Thank you all for joining, and I'll see you in the next one.